And welcome, everyone. I'm your host for this session. Welcome to the sixth edition of our Trading Congress. The virtual trading camp is back. And congrats, ladies and gentlemen, for taking advantage of this huge opportunity as we have lined up real experts, CMTs, CMOs, CTOs, real people from the real field. So you will have access to the very best education, resources, and experts to help you succeed in the market. Join us every day. Today it's Monday and Saturday will be the last show. Every day we're going to host different shows. You don't want to miss a thing, as we genuinely believe the best time is truly now. Without further ado, I'm super excited to introduce you our very respected guest, Michael Nauss, CMT. Michael, welcome in the show. It's such a pleasure to have you here. For those who don't know, I'm a CMT level 3 candidate, and it's really a privilege to host shows with CMTs who have already crossed that bridge that I still yet have to cross. Michael, how are you doing today?
Oh, I'm doing fantastic. Thank you guys for having me. I'm glad to be back. I was in the last one as well, and I think this is awesome what you guys are doing. And hey, what a time for it in the market. You know, you picked a great time to talk about crypto for sure. I know you had booked this a long time ago, so
Yeah.
you couldn't have known going in, but yeah, what a time! What a time to talk crypto.
Yeah, indeed. You just confirmed it. The best time is really now. And I
Yeah.
also honestly believe when it comes to education, whether it's a bear market or a bull market, the best time to educate oneself is really now. Um,
hmm
I am in this space since 2017. And one of the most terrible things I have done in the beginning was consuming resources that were actually not really reliable.
Yeah.
To learn something, it's one thing, but to unlearn bad concepts like misconceptions is another
hmm
thing, because that actually requires way more brain power and willpower. So, Michael, we know why we are here. We are here to talk about systematic trading. And if you would love, give us a short, brief introduction to systematic trading and what it is and how it has helped you in your trading performance overall.
Yeah, and I think you hit on one of the major reasons that we need, and I think everyone should pursue systematic trading, because you talked about, and very nicely put, that there's a lot of BS kind of content out there, not just in the crypto world, in stocks and forex and everything in trading space. But The beauty of what I do and what I look to do with systematic trading is we have the data, right? So we can prove certain things. We can test certain things. So the when I talk about systematic trading, and just so that we define things for people as we're going to talk forward, I mean trading in a way that is repeatable, that you have a system for, that you're trying to remove as much discretion as possible out of the equation. And what I mean by that is that some people think that the secret to trading is that people that are really good at looking at charts, they just look at charts and they naturally draw some lines where they think they're going to draw some lines, and then they make money from that. And that couldn't be further from the truth. Every trader that I've ever met, and I've have a long career in the trading space and in the crypto space, is that the you know the traders that I met and the ones that do very well, they all have some kind of system, and how much discretion is involved in that system is completely up to them. But they have a, if this happens I do this, and then if this happens I do this. And systematic trading could be something even as simple as I look at the same charts at the same time every day, and my charts are the same size as they always are, uh, all the way down to something more like what I do, where I want to test a theory every time before I take a trade. And we live in a world now, especially with ChatGPT and things like this, where systematic trading and getting into systematic trading couldn't be any easier than it has been before, right? Technical analysis at its core, it came out of a way to try to systematize trading and try to way to systematize decision process, to be able to define things like what is an uptrend and what is a downtrend, and what are these patterns and how do these occur, and can we find these things over and over and over again. So when I talk about systematic trading and when I define systematic trading, that's what I mean, is something that I can do in a repeatable way, that I have a process for. So it removes a lot of the emotion, it removes a lot of the guesswork, and it removes a lot of that discretion out of my decision making process. I sit down and I wait for certain things to occur, and then I take certain actions.
Yeah, I fully agree with that. As a trader or aspiring trader, one needs to rely on a certain concept that's backed up by data.
Hmm.
I myself, I would classify myself as a discretionary trader. However, I do have some hard rules when I want to enter a trade. Um, what I often find difficult is how systematic trading also helps with having the overall context of the market.
Hmm.
What kind of tools or systems would you use to understand the context of the market?
The primary tools that we have that are beautiful, that we have again for every market out there, I would say crypto is easier than most, but every market that we have is just the simple data feed and the historical data, and you can get those in a lot of places when it comes to basic apps like TradingView and TrendSpider, all the way down to, if you want to get a little bit more precise, there's APIs that you can pull from. There's things like that that you can grab. And once you have the data, then it becomes a creative endeavor about using what you're seeing in the markets and what you're seeing with technical analysis, and then wondering what it is that you can test and then systematize. So for example, a lot of the systems I run in the equity space will just use the S&P 500 as a context, and simply say, hey, if the S&P 500 is above its 200-day moving average, you want to look to be investing in stocks, you want to be buying trends, you want to be buying breakouts. And then if we're below that, which is generally what happens in a bear market, you want to switch to other systems and you want to be more aggressive with your trading and all of that. Same thing that happens with a couple of these crypto systems I have, where you can use moving averages or anchored VWAPs or whatever it is to determine whether you're in risk on or risk off environments. So, and what I'm sure we'll cover, and what I think will be fantastic for this, we'll talk about how there's levels to this when it comes to systematic trading. I think everybody should be, in some respects, a systematic trader. It just depends on where, right? So, for example, it could be, people are pretty good determining, crypto winter versus a crypto bull market. And I think a simple thing for people to do systematically would be to find some actual definition of that as opposed to kind of vibes. And when you do that, you know whether to be aggressive or whether to be passive. Myself, until Bitcoin broke out of that $70,000 range, I wasn't doing much in the crypto space. When that started to occur, now I'm buying Decentraland and like all these coins that I don't even really know what they do, but they're starting to come up on scans and processes. So whether, you yourself, even as a discretionary trader, you classified yourself as that, and then you gave a caveat. You say, but I have rules that I will do, or things I will do and things I won't do. And I think that's always a best place to start for context and say, okay, let me build a framework so I'm not just coming in and shooting from the hip every day. Even very loose walls, I think really help, especially a new trader, start to get going in that direction.
Yeah. Is when it comes to risk management, what you said, Bitcoin above the 73K, and then I want to have some exposure, and you went into Decentraland, and maybe even some of these other digital assets or cryptos. You have actually no idea what they're actually doing, but
Yeah.
technically they are performing well. um, how does risk management works when it comes to discretionary versus non-discretionary trading? Would you say there's any difference or not so much?
No, and the beauty of being systematic, the more systematic you can get, is you're planning out every aspect of a trade before it occurs, and even running some through mechanical systems. So I have one mechanical system, for example, that uses the year-to-date anchored view up. I actually have the back test. Maybe we can show that later. And it just says to get involved in Bitcoin when it's above its year-to-date anchor view up, and be in cash when it's not. And it ends up performing very well in the long run. So you can actually bake in the risk management side of things, because if there was one piece, I believe, to systematize over all others, it would be that. And the reason for that is that that's when emotions get in, right? I think knowing what to buy and when to buy it, that is probably the easiest part. You buy things in uptrends, you buy things breaking out of ranges, that's the easiest part. The hardest part is, when am I wrong? And even more importantly, sometimes, when am I right? And there's a lot of people out there that, even from the last cycle, had amazing gains on paper, had no plan in which to capture those gains, right? Wrote everything down to, 99% drawdowns, maybe more. And maybe they're starting to get back into even now. So yeah, I would say risk management is the same as discretionary trading. However, because you've completely systematized it and maybe even made it mechanical. For me, for example, a I have a stop loss order that goes out the same time as my trade. And a lot of brokers can do this. Kraken can do this. I know Coinbase can do this, where you just attach that order. So as you're hitting buy, that stop loss order is already sent out there, and then you can walk away. That, I think, if there's like a level one of systematizing your trading, I'd say that is it. And if the viewers take away nothing else, I would say you do that. If you can, there's no reason for you to sit there all day long and wait for the moment to sell. If you can set up your whole order and say, I want to buy here, I want to take profits here, I want to sell if I'm wrong for a stop loss here, and you can just hit that button, have that completely systematized and mechanical for you.
Yeah, I so completely agree with that. Like my field of expertise is mainly market psychology, trading psychology.
Hmm.
Um, we all know that, okay, if we are wrong and we don't know that we are wrong, we will stay in the wrong for a very long time, and sometimes even until the next cycle,
Yeah.
because the ego just tries wants not to be proven wrong.
Hmm.
And I believe, like, probably with a non-discretionary trading system or mechanical system, you're out of the market and not per se aiming to hit the top, as I believe. Perfectly selling at the top is probably very impossible.
Yes.
Personally, I'm already happy if I just give back 30 or even 40% in this space, especially in the crypto altcoin space, my
Hmm.
profits back to the market after a big bull run, then I think I've already performed very well, especially against the benchmark. Personally,
That
I'm not
was
saying.
that's a great, I think it was a Jesse Livermore quote from
Mhm.
Reminiscences of a Stock Operator. He said the bottom 20% and the top 20% are the most expensive, right? So,
Ah,
that middle bit is really all we care about. We
yeah.
don't want to try to catch the bottom. We don't want to try to get to the top. That's why, for my testing, which is again is another benefit of being very systematic about this, is I can test hundreds of different scenarios every single day, and I can do that with data. I have found that, especially in the crypto space, some sort of a wide trailing stop like you're talking about, it's the best way you can achieve profits, because you never know when that coin is going to just triple or quadruple or whatever. So if you're taking profits, and that can be a problem if you're if you don't have some sort of system, say, hey, I'm just going to hold this knowing that I will never get the top tick. It will always come back and hit some sort
Mm,
of trailing stop. That in my testing has certainly been the way forward.
yeah, and that's also the way. I fully agree with that. Michael, you've been in this space for a very long time. You have also like the
Yeah.
CMT designation. And by the way, those
Mhm.
who don't know what CMT, where CMT stands for, I think you have been sleeping under a rock for a really, really long time. It stands for Chartered Market Technician. I believe it's probably the highest level you can obtain when it comes to market analysis and technical analysis.
Yes.
Uh,
Yep.
um, I would love to hear from you, Michael. What are the few misconceptions you often hear about um, systematic trading?
Yeah, I think, and I will just reiterate that CMT, that is that, and it also, the CMT goes back to what you talked about earlier, where there's so much misinformation and disinformation out there, and anyone can load up a chart and draw a bunch of squiggly lines and pretend they know what they're doing. So yeah, the CMT definitely does a good job of changing that, where you even getting through CMT level 1 and 2 and on your way to level 3, it's a great badge of honor to say, hey, I have actually studied these things in an academic sense. I've been tested vigorously, right? I know what's going on. So again, congratulations for that. And when it's time to get a sponsor, certainly let me know, because that you got to do that at the end. So I'll definitely write you a letter there. Um, but yeah, when it comes to the major misconception about systematic trading is, I think people believe that there's either two sides of a coin. You're either a discretionary trader or you're a systematic trader. And what I mentioned before is that there are lines behind this, right? People generally hear systematic or mechanical trading and they think, fully black box, quantitative, right? A bunch of numbers, string, everything has to be coded, everything has to be set up. And it's certainly not that. Like I mentioned, there are levels to it. Level one, again, like I mentioned, would just be sending out all your orders at once, right? Put out your order, put out your trailing stop, and then you don't have to watch it anymore.
Mm,
Level two is, it would just be setting alerts, right? Something that we all do and we don't think is systematic, but setting an alert is basically saying, I want to look at this stock if it reaches this particular price. And then we go into, higher levels, things that I do a little more of, which is, back testing and proving theories, and then all the way to maybe something that's fully quantitative or mostly quantitative. But that's the kind of big thing that I'm always pound the table on to try to get people around, is that systematic trading is not a binary, I'm a systematic or I'm a discretionary. It is the where is the range of it. And I would say, if someone's interested in exploring more of it, they should be asking themselves certain questions like, do I add value when I do this? For me, it was staring at your P&L and staring at charts, right? That was something that I thought and especially in the crypto space, you'll be up all night right on your phone staring at charts, and it doesn't add any value to anything that you do. So, the first thing, that's why I call it level one kind of systemization, is just set out your orders and let them go and walk away and enjoy your life. But yeah, understanding that there's levels to climb. So if you're someone now who's sitting there as a discretionary trader and you want to get more systematic, just understand that it doesn't mean you have to learn Python right away and become a complete coding bot. That you can slowly approach this by simply asking yourself a question: when I take a trade, where is it that I add value? Did I add value on the entry? Did I add value on the exit? Did I add value in the analysis? And if you are really good at analysis but not trade execution, great. Be discretionary on the analysis, be systematic on the trade execution, right? If you're someone who's doesn't know what to do with either of those, well, then maybe you try to be systematic with both. So yeah, it's a spectrum, it's a gradient.
I think I just found a beautiful quote, Michael.
Oh,
Oh,
great.
really? Be discretionary with your analysis. but be non-discretionary with your execution. Could you repeat it,
Yeah.
because that really hit quite hard, I must say.
Yeah, I think that's, and again, for everybody, I'm not trying to convince everybody here to be a systematic trader. I think most people would benefit from it, but yeah, being discretionary with your analysis and systematic with your execution essentially just means, for me, and I do videos on my YouTube channel weekly and daily and all kinds of analysis. And for months, I would be getting questions of, what are you doing with Bitcoin? And in these videos, I'd say, listen, Bitcoin like 72, 73,000. It spent months chopping under that range. So my analysis, my work on Bitcoin took me like 10 minutes a week. I had a stop limit order in place that when we broke through that zone, it would buy me in, and it would put out a stop loss and a trailing stop, and I had all of that sorted. So when I'm asking myself the same question, is where do I add value? Would I add value checking the price of Bitcoin 17 times a day? No, right? I've done my analysis. I've been very discretionary. I drew the cup and handle that I think everybody in the world was looking at on Bitcoin. And then I was very systematic with my order entry. I said, I'm going to buy it here. I got out of most of my position right before 100K, just because I thought everyone in the world was looking at 100K. So I sold at like 95, most of it. And the idea was just, I can have a system, a robot, I can have my exchange or my broker take care of all of that other stuff for me. I am just going to then free up my brain power, which I don't have an infinite amount of, to do things like the analysis, where again, systems, they'll deal with the execution, right? It's like I have an employee, and it will, I'll tell it when to buy and sell.
Yeah, I see so many traders, especially discretionary traders, without like a proven system, falling into
Hmm.
different traps. One of them is analysis paralysis or decision fatigue. They're seeing
Yeah.
something, and especially when checking your own portfolio or P&L or a trading view for that matter, it doesn't bring any value at all. Knowing when your entry is bringing value or your stop loss or how to trail out does give a lot of value. Um, so as you said, I also believe that willpower and discipline, especially discipline, comes from
Hmm.
willpower. And the more we need to think, even like small things in normal life, for example, today would be like a black or a white hoodie, or in the morning would be coffee or tea. The more we think, the more little decisions we have to make, the less willpower someone will have for
Hmm.
for especially the bigger things. There's a reason why big CEOs or CMOs, and they're always very consistent when it comes to clothing. For example, Steve Jobs always had the same style, and
Hmm.
I also have a lot of other in my former job colleagues who are always very consistent with one thing, so they don't need to waste their thinking power on other things.
Yeah. This is
Uh,
decision fatigue. Yeah, it's very
yeah,
well studied that, that's
yeah,
why, uh, myself included, and a lot of people, you end up breaking on diets and stuff in the evening,
mm,
right? Because
mm,
as the day goes on, your
true. Yeah.
your decision making muscle ends up getting tired. So yeah, you're 100% right. The more you can offload that, the better, right? And
Mm.
the more kind of bandwidth you have opened up to do other things.
Yeah, definitely. One little thing is already setting the alerts at key levels, or getting a trading a view alert, or whatever charting tool someone uses to, for example, to get an alert when the MACD crosses, or EMA cross, or an MA cross, or something else. Yeah, definitely. That already helped me a lot, because it saves me just a lot of time. And honestly, screening the market is not my most favorite part of trading and market analysis.
Mhm.
Michael, question: you mentioned at the beginning of the conversation about AI and the use of chat AI. Do you see any trends when it comes to algo trading or systematic trading and AI? Will this trading space, but especially in the niche of systematic trading, will this become like a more competitive um, area, as people are using different AI tools?
In some degrees, yes, in some degrees, no. So, it might shock everyone to know that I'm not a coder as a mechanical and a systematic trader,
Mm,
right? I can't build a Python whatever, but
mm,
so what I always had to do before is I would just learn the language of whatever it is that I was using for testing at the time,
mm,
and that actually was probably my greatest weakness. It pigeonholed me into hey, I'm a CMT. I worked in finance. I worked in hedge funds. I did all this, but I didn't do the computer stuff that a lot of people did, right?
mm,
But with the introduction of LLMs and Claude and ChatGPT and all of this, instead of me working very, very hard to make up for what it is that I was lacking, which was the ability to code a system, I would spend the time doing the research and going through the charts and doing some manual back testing and said, okay, well, now I need to code this in order to back test it, in order to potentially have a system to trade it. What I ended up being able to do is now, instead of spending my time doing that, which for me was a lot of time because it was just something that I wasn't educated at and prepared at, I can now have, Claude and ChatGPT assist me. So the amount of tools that I have the ability to backtest with has grown exponentially. So something like Amni Broker, people may heard about it. So it's a great backtesting tool for lots of different things. They have their own particular coding language. So
mm,
somebody with coding experience could probably hop in that and learn that in a couple days or weeks and go from there. But that
mm,
was more of a struggle for me. But now I can simply give my idea to a Claude or again a customized GPT that I made that's learned off of the help docs, and I can have a little assistant that is kind of my coder, and I can tell it things, and I can say, okay, I want to, like, for example, the Anchor View app test that I run. I want to run this on the cryptocurrency space, and here's the data. Now, how would I
mm,
code this out? And it gives me a framework, and we go back and forth and we tweak it. So, where I find a lot of, especially like these, I'd say less than honest YouTube videos and everything could get people into trouble, is the people who like type into ChatGPT, how do I make money in crypto? And it's like spits
mm,
out a trading strategy. That absolutely not. I'm not worried about for the longest time, because those would get arbitrage out of the market incredibly quickly.
mm,
Where I think this is really going to help out is kind of a democratization or a leveling of the playing field. You
mm,
don't have to be a coder anymore in order to trade systematically and robustly. All you have to do is get the data from somewhere, get a backtesting program. Even if you don't know how to program in their language, you can go to a chat GPT and you can
mhm, mhm,
tell it what you want it to test for, and then start to go back and forth and learn like that. So that's where I see that flattening of the curve now, where anybody, regardless of programming knowledge, can really, really get into this world way easier than they could before. I
mhm,
feel bad for some people who, might be coders. The AI might be coming for them, but when it comes to the creative pursuit of what to test and everything like that, I'm not too worried about that. But yeah, I think it blows the doors off the amount of people that can test and code things.
yep. Like there's one thought I had about those who are really good in coding, but also in systematic trading and having a system. So the non-discretionary traders, but then
Yeah.
versus the discretionary traders. Who would win, you think, if there's like a competition between discretionary and non-discretionary trading? Maybe like a
I
silly question, but I would love to hear your view on that.
No, I think, and I'm talking against my own team here, but I think so. I'll give you an answer and then a caveat. So an answer is that a great discretionary trader, I think, would beat on a return basis a
Mhm,
great systematic trader. I think that, and again, that's talking against my own team, but that's fine. But what I would argue is that a great discretionary trader has already have systems in place, right? They're looking for the same thing over and over again. You could look at like a William O'Neill or Mark Bianvini or some of these guys who have these same type of um, the same type of setups. They trade every day, they trade every week, they trade every month. They have
mm,
built that kind of systematic idea into place. Now,
mm,
the other caveat is for how long, right? So, talking about the mental capacity of someone and longevity and things like
mm,
this, the advantages of systematic trading may not I may not be able to beat like a Mark Manvini or one of these guys from a purely return basis. However, his life's going to be way more stressful than mine, right? And for a number of reasons. One is one of the powers of systematic trading that I haven't talked about yet. So you can run tons of systems, right? I trade forex and crypto, and I day trade equities, and I swing trade equities, and I've got some investment type strategies. And by diversifying among systems, I very much smooth out my returns. Like right now, obviously the crypto systems are just completely killing it. They're doing fantastic. Last year, not so much, right?
No.
So, but being able to run all these systems, I just don't think a human being could do and have any sort of actual
Mm,
social life from a systematic point of view or a discretionary point of
mm,
view. Because how would you manage your time,
mm.
trading equities and futures and all of
Yeah.
this as well, where as a system trader, the actual act of my trading only takes a few minutes a day.
Mm. Michael, you really inspired me and motivated me to look into, more optimizing, or I should systemizing my own system. There's like one thing that always worries me, and I think it doesn't matter if you're a discretionary or non-discretionary trader. It's the
Mhm.
so-called like decay of edge. Like someone can have an edge,
Yep.
but the question is always, how long is this edge your edge until you're edged out? Is it something also that concerns you a little bit? And
Yep.
what do you do to make sure that you still have that edge so you can make benefit from that?
Yeah, it's constantly part of the game, and I think the perfect example to that for the audience is what's happening right now in Bitcoin. Again,
Mhm.
I said that I sold the large amount of my position. I've got some, I'm not like a huge pure crypto bro, but I got some in a Trezor locked away somewhere forever. But the trading part of it is the way systems and the way things get edged out of the market is too many people looking at them. So what ends up happening is, right, everybody says I'm going to sell Bitcoin at 100,000, and we'll probably get there
Mm,
eventually, but it gets to 95 and then it drops because
mm,
everyone is starting to sell against that $100,000 area. And the same thing happens if there's a very famous trend following system that works. Too many people will use that, and that will get kind of destroyed out of the market. The main idea behind that is that the way around it, and it's going to happen again for all, like you mentioned, all traders. And the advantage of systematic trading is that multiple systems. So what can happen is I've seen it a lot where
mm,
a discretionary trader has, especially like a day trader, right? They have some sort of gap and go strategy on equities, and that's what they do. And they do it for a couple of years, and they make a bunch of money, and it's their bread and butter. And then it starts to degrade and it stops working. The person that does that one system over and over again, they're kind of screwed, right? And they have to stop what they're doing and take a couple months off and create a new system. As a systematic trader that's running multiple systems across multiple equity types, time frames, and things like
mm,
that, is that I'm able to go, okay, I'm able to watch them all individually, and I kind of treat them like employees, where this one's no longer performing. And then I have to ask some questions. So,
mm,
for example, last year crypto wasn't doing the best. So
mm,
I'm watching the system, and then I'm saying, is this the employee's fault or is it the market's fault? And in
mm,
that determination, I said, well, it's not a great crypto market right now, so we're
mm,
just chopping around. So there's really nothing to do. And
mm,
so what I end up doing is I just leave it, maybe assign a little less capital to it or something like that, and then go from there. But the beauty of, again, the multiple systems is that as soon as one isn't working, then I can just replace it with another one. That also leads me to just kind of, people think discretion or systematic trading and all of that means you load up your system, you go to the beach, you have a drink and a good time. But
yeah,
there's still a lot of work to do. But my
mm,
work is always, what's the next thing? Because I'm always worried the systems that I have in place are not going to work. So that's why I
yeah,
love coming to events like this and
mm,
watching what you guys are doing and listening to other traders and talking with people, because I'm always have my brain open to what's the next idea that I can then
mm,
go and work and build into a new system. So I can always be kind of looking for what's next, so that when something breaks, hopefully I'm bringing in something new to replace it, if that makes
mm,
sense.
mm. It totally makes sense, and very, very inspiring what you're saying here, Michael. This brings me also to the next question. This might be like a very valid question for both discretionary but also non-discretionary trades. Maybe even more important for non-discretionary traders is, When do you know, like, do you have any hard rules when you know that your system um, is not working anymore? Is it like a numbers of day, a drawdown, or something else? Like, are there like some certain rules that you deploy and say, okay, if this happens, then I just know it doesn't work for now.
There's a couple ways to look at it, and again, I love this conversation because this is the hardest part, right? So you've
Yeah.
tapped into like what the Achilles heel of systematic kind of trading is, and I look at it like kind of a step by step process. And again, we'll use the employee analogy again. So
Mm,
I look at, imagine you have a bunch of people out there selling you cars, right? You own a car dealership and they're selling you cars, and one guy stops selling you cars. Well, you're not going to instantly just fire him right away. Hopefully you're a nice boss, and you bring him in, you ask him,
yeah.
hey, what's going on? And is it some sort of external event? Yeah, maybe he's got some hardships in his life and he just needs some time to get over them. And you go, okay, that's fine. Or in the case of some systems, maybe they just need a little tweak. Like maybe that person just doesn't do well selling on the
Mm,
weekends and you got to put them in during the weekdays or something. So sometimes it's, can I tweak this system? Can I
mm,
change the parameters of an indicator or something, and it starts to pick back
mm,
up again.
yeah.
And then, yeah, sometimes it dies entirely. A very simple way and a good starting point that I like to do is I like to plot a moving average on the actual equity curve, right?
Mm,
So as the equity curve's going up, it's above its moving average. And I just let it go, even if it's not doing too well. But as soon as it kind of dips below a moving average on the actual equity curve, I go, okay, now it's time to, this is when it's time to work as a systematic trader, right? So you sit down,
mm,
and this is where discretion comes in, even for me as a mechanical trader, is I'm saying, okay, is it the market? Is it has something changed fundamentally in the way things trade?
mm,
A perfect example would be people who used to run arbitrage. I used to build way back in like 2016, 2017.
mm,
I worked with a company that built arbitrage bots for crypto. Right? You buy in one exchange, you'd sell in the other exchange.
mm,
That you could watch it over time. That get tight and tight and tight, and then no longer work really
mm,
worthwhile putting your money
mm,
into. In that situation, it was obvious, right? That it's
mm,
just got everything's got too competitive. The big guys came in, they started to do the same thing. It's just not worth it anymore. So yeah, it's a very discretionary process. But yeah, you should have some sort of a again, I like the moving average or something. Not so much to say the system's broken, it's time to throw it out, but it's okay. I really need to look at this now because it's no longer doing what it used to.
mm,
Maybe turn it into a paper trading mode, maybe, assign it only a very small amount of capital, but try
mm.
to see what's going on. And then if it starts to perform again, then right, you take it out of paper trading, or you size it back up and apply more capital to it.
Yeah, that makes so much sense, Michael. Hope the audience is making here some notes. I mean, if you want to know when you're edged out, Michael basically just told you, which things you have to pay attention on. Michael, I have a question. So I do have like some hard rules,
Hmm.
and if these hard rules they are not met, I just don't do anything because I believe knowing when not to trade is more important than knowing when to trade, and
Absolutely.
losing less makes you automatically a little bit more profitable.
Yep.
Um, I execute my trades actually always manually, but I do have some hard rules. Am I a discretionary or a non-discretionary trader? If I do have a system, however, I execute manually, so there's no one that really does the trading for me. It's
Hmm.
probably only setting the buy order,
Yep.
or maybe the sell order, or using a tool to trail the stop loss. What am I? A discretionary or non-discretionary, or like a semi non-discretionary trader? Or
Yeah, I
maybe I'm
would say
confused.
I would say everyone who's been in the game longer than a year or a couple months,
Mm,
I have yet to have a conversation because it's strange. Some people are very opposed to the term of being a systematic, or for you, I would say kind of a semi-systematic trader.
mm,
And I can sit down with them with a beer, and by the end of the beer, I have them admit it that okay, I'm a semi-systematic trader, right?
mm,
Guy would say, no, I'm purely discretionary, but I won't buy anything when it's under the 200-day moving average. I'm like,
mm.
that's a rule in your system. Your
mm,
system only has one rule, but you have a
mm,
system. And
mm,
the only people that I'd say are purely discretionary traders are guys that literally just bring up a chart and draw a bunch of lines and say, okay, I'm going to
mm,
buy it if it, and just and let it go. And yeah, I'd say most people are at least somewhat. Again, looking at it as a spectrum. And what I would say again for most traders is understand, okay, I'm already, if I have any kind of rules or any kind of plan, like even a simple rule like I don't average into losers or something like that,
mm,
you're semi systematic, right? So you're already starting. Now the question
mm.
is, how much can you kind of push yourself to free up time, to have less emotional baggage, to have less stress when it comes to your trading? What can you kind of push the needle on, because you're already there? And yeah, I would say 90% of traders and I are semi-systematic, and I would say 100% of profitable traders over a long run are semi-systematic.
Yeah. So that means that they have a proven system, but it's like the execution of those trades are not automated, but like manually done.
Yeah, and
Um,
I've got a great example for this as
uh
well. My brain works in analogies, maybe because it's just I'm getting old and gray, and it just kind of helps. But I always think of it so like a purely discretionary trader would get in his car and say, "I'm going to go drive there. I have no idea how to get there. I'm just going to start driving and turning, and hopefully I get to the place, right?" And then, a little bit more of a systematic driver would look up the directions beforehand and say, oh,
mm,
I got to go here. And then,
mm,
the next one would be like, I'm going to use Google Maps on my phone, and it's going to tell me where to turn. Not necessarily going to turn there,
mm,
but it's going to say, hey, turn, because we've all done that where Google Maps tells you to turn down that street in your neighborhood. And you know that street's always busy, and, it's a mess, and I don't want to go down there. So you have a system, you can overwrite it or go with it however you want. And then a fully systematic is kind of like a Tesla self-driving. You just get in the car and
mm.
you say, take me to the coffee shop, and take a nap, and you get there. So the same with trading. It's just, where are you existing on this spectrum?
That, Michael, was a very beautiful analogy. Everyone can understand this analogy, and it's not because you're gray or old. It's just, I think, it's wisdom. It's a
Yeah,
good one.
I'll
That's a
take that.
very good one, Michael. I also know that you have prepared some slides. Perhaps we have some, so a few minutes to go through a few of them to share some
Sure.
visualized alpha here.
Yeah, so I'm just gonna let me grab these, and I'm gonna bring up the actual rules so your audience knows. But these are just some systems that are very, very loosely tested. So I just wanted to make sure that that we know this. So this is my year to date anchored view app ideas that I come from when it comes to systematic trading. So I have this on a bunch of different systems, right? And the idea is simply, you know, I don't know if you guys have Brian Shannon coming on, but if you haven't heard of him, you should definitely pick up his books, Anchored View Apps Using Multiple Time Frames.
Oh yeah, I know.
Um, they're amazing. Um, and this system uses just that indicator. And the idea is that with Bitcoin, you can very, very simply make sure that you're in when things are working, and out when things aren't,
Mm,
and beat the market overall based off of a simple anchored VWAP system. So the idea is that you take the anchored VWAP, which just represents the average price of the average market participant over whatever time you're anchoring
mm,
it to. For this one, it is I'm anchoring it to the first day of the year. So
mm,
if basically the most people are positive on the year, you want to own Bitcoin. And if most people aren't positive on the year, you don't. And this, again, is a very loose, I wouldn't just trade this system as is. I would refine it, but it's a great red light, green light. Now, the blue chart represents what happened if you traded this with your account on Bitcoin. And then the gray line is the actual Bitcoin chart. So you can see dramatic, you're talking over the period tested, which is back to 2014. Bitcoin's 11,000%, which is just ridiculous to begin with. But this system is 37,000%. And the beauty of it is that you're sitting out these flat areas on the curve are when you're in cash. So you spend a lot of time just sitting out the market. And this, to me, I brought this as an example of, again, not something that you would just plug in and do, although you could, but it is a great starting system. So like we talked about, red light, green lights, when to trade, when not to trade. This would be a great one of just you take an anchored view app year to date. You do that in TradingView, TrendSpider, a lot of different charting platforms. You put that on there. You simply say, if Bitcoin's below this, I'm going to trade another asset. I'm going to trade something else that's not, nothing crazy going on. If Bitcoin's above its year-to-date anchor view app, maybe that's when I spend my time doing my analysis, doing all this, because I know based off basically all of the history of Bitcoin really being actively traded, I do better and I'm out of the market more, which is you always want to be out of the market as much as you can, because you have no risk then, right? You're sitting in cash or staking or whatever it is that you want to do with your money, and you end up doing much better. So the massive drawdown that happened in 2021 is way less, right? And things like that. And I brought this for a bunch of different assets. So this is Bitcoin. This is Ethereum with the exact same system. And you can see Ethereum still hasn't gotten out of bed. It still hasn't woken up to this whole bull market that's going on for everything else.
Slowly but
But
surely.
hopefully slowly but surely. And I actually brought this one because you can see a little bit of action in the chart right here.
Mhm.
So this system just started to turn on about I think 3 weeks ago, and just said, hey, you want to start buying Ethereum. Stayed out of Ethereum, for a long time, where I know a lot of people were buying it, hoping that it would catch up with Bitcoin. Just starting to turn on now. So I have a system, I have an Excel spreadsheet, and I just look at this, every week, and I just put a little green light or red light. So Ethereum has now turned on green light. That's why I actually bought Decentraland, because it's Ethereum based token. And before then I was just kind of, I'll move on and trade other things. But again, even though a very choppy system, the ability to stay out of these bear markets is amazing, right? It kept you out of most of this down here, made you a little bit money when we came above that year date anchor view app, and then right back to cash, right? And this is Solana, right? Tested back to 2021. Same thing. You just ignored Solana the entire time. Took a little bit of a trade in early 2023 and then stayed out. Then you got back in, you got this whole move, right? So again, the idea again is not just this is a system, you just plug it in, you buy it when it's above its anchored view app, year-to-date anchored view app, and you make a bunch of money. But it's just an example of something that someone who still want it to be only semi-systematic could use and say, I'm just going to check now that I know that I've tested this thing and I know that this thing has some edge over the market. I've now made my life much easier. Imagine all of 21, if you're a Solana guy, all the way to 2020, end of 2023. You're not even looking at Solana. You got so many other things, that decision muscle that we talked about earlier. You got so many other things to do, so many other things to look at. And then one day you get a flashing signal that, hey, it's time to look at Solana. You go in, you do your technical analysis. I remember there was a great pattern that was setting up in this area at the beginning of the year that you could have traded, things like this. So yeah, just a simple lights on, lights off kind of idea, and a really good example of something I just wanted to bring to the audience to say, hey, this isn't a black box quant system, but this alone would help out a lot of people, because I'm sure there's tons of people who spent a lot of years trying to bottom pick Solana, where for me, I'm just not interested. So once a week I go through and I either, color a cell green or red, depending on whether it's something I want to apply to my analysis or not.
That's a really good example. I think also, I think there is also this misconception that the more rules, the better, and people are
Yeah.
always kind of in awe if you tell them, well, if the RSI is doing this and the anchored volume is doing this and the volume profile is doing this and the MACD cross is doing this and the MA and the EMAs are doing that and the bands are doing that, and then I'm gonna do that. So there are like a lot of rules, a lot of parameters, which makes it really complex. But this is just a beautiful illustration of just having one rule basically
Yeah.
is
One rule.
is basically enough for a trading system here.
Well, and one rule that makes sense to me, right? So the other thing is that we don't want to. You talked about how you focus on the psychology of the markets and everything before. A lot of people think quants or systematic traders. We just ignore that, right? But it's not. The rules should make sense. Like, so what does being above a 200-day moving average mean? Well, it just means it's in an uptrend over the last year, right? That's just all it means, right? This anchored VWAP is basically just telling me that from the beginning of the year, where a lot of people have their portfolios anchored to, because if you look at, right, a lot of brokers do year-to-date statements, right? So my year-to-date statement, if my year-to-date statement is green, I'm probably in a good mood about the market. If my year-to-date statement is red, I'm probably in a bad mood. So it's a one rule system that's a very simple system that makes a lot of sense, because if we're above this, then it's green and people are doing well and people are making money. So that's a market I potentially want to trade. If people are, mad because they're down 90%, they're losing money, it's not really a market I want to trade, because you don't get these euphoric moves that we're seeing right now in the crypto
Yeah.
space.
Yeah, that totally makes sense. By the way, like two things. One, uh, this is a message for the co-host. Please drop the Twitter handle of Michael here in the chat. And secondly, this beautiful illustration also just tells me when you're interested or not interested to open a position. So in this case, you had to sit out for a very long time, right? And then benefiting from bullish price action after sitting out for such a long time. So how long was like the sitting out time here in relationship to when it was making a good move to the upside? So how long
Yeah.
someone had to wait for?
Yeah, so for Bitcoin, it's January 2022 to January 2023, basically. So you sat out for the
Yeah, yeah,
entire
yeah,
the
yeah.
entire year. Now, I'm tailoring this to an audience who are not yet systematic traders, but now, just to tease people, if you want to get really into this, the multiple systems thing start to come into place, where
Mm,
basically this system is telling us we don't want to be long Bitcoin right now. Maybe we don't even want to be short Bitcoin when it's below this year-to-date anchored view up, but maybe we want to be active. So these systems can not only say it's below the year-to-date anchored view up, just let me ignore crypto and not do anything with crypto. It may just say this is not conducive to buying and holding crypto. So what a more systematic trader would start thinking about when I see a chart like this, and what I am thinking about, what I do with something like this, is saying during these flat periods of time, well, my money's just sitting there. It's not doing anything, right? And that's not fun. That's
mhm,
not fun, and that's not the best use
mm,
of capital that I can come up with. So
mhm,
those flat periods of time, maybe it's time to zoom into an intraday chart and start to play a revision to the mean system, where you're
mm,
buying dips and you're
mm,
selling rips. And then if that can make any kind of money while these equity curves are flat, then that's great. I have a system to
mm,
say buy and hold crypto, and then I have a system to say trade crypto actively. And I have
mm,
this red light, green light system. So now we're just starting to see how these things can start to stack on top of each other. So for for equities, I use VIX levels, right? If we're in a low VIX environment, that means there's
mm,
not much volatility in the market. It usually
mhm,
has a nice steady trend. I want to just own a bunch of names, like I own Nvidia and Tesla and Amazon and all these names right now, because they're trending higher. When it's 2021, 2022, during that bear market, I am not owning anything. I'm in cash every night, but I'm actively trading things. So yeah, these periods of time where you're sitting out doesn't necessarily mean you're not doing anything. I would say you're either building new systems that could work in this environment. You're building new systems that maybe will work better than this one will be when this system tells you to trade. All kinds of stuff you can do. So yeah, it's one of those.
mm,
It's sitting out, but like I talked about, you just don't go to the beach and sleep. And maybe it's time to work. Build another system. Build
mm.
an actively traded revision to the mean system.
Yeah.
If you're in the equity space, maybe you're selling options here and you're generating income like that. You're staking, you're doing, any number of things that
Mm,
generate
mm,
income, knowing that all you have to do is check once a week. And when that system goes from red to green, well, now I'm going to implement this other bit of trading.
mhm. Yeah, that's the way. And by the way, also, to those who think, "Oh, I'm just sitting here on the sidelines," how I'm seeing it is I'm protecting actually two things here. One, my mental capital, and then my financial capital. And on top of that, indeed, it allows me also a lot of time to rethink my approach and to rethink the market. So I'm having like a yearly training plan, and then I have like a quarterly training plan,
Mm-hmm.
revisiting them when I'm basically edged out, or I'm waiting and not forcing. uh,
Yep.
maybe easy said, difficult done, as it requires a lot of sometimes discipline to sit in your hands. Me personally, I'm only doing crypto. Might
Hmm.
transition into stocks or the legacy market, but as for now, I have a lot of fun in the crypto, especially I hope in the next few months.
Yeah,
Um,
that's the hope.
this is a quick like message for the audience. As you guys know, we have this trading congress. This is day one. Saturday is the last one. We're gonna do a lot of shows. We're gonna spoil you guys with alpha, just like the alpha Michael shared with us. So I would say give Michael a big shout out. Hit that like button. I've shared your Twitter handle also here in the chats, and that's your main social media channel, Michael, Twitter.
Yeah, I link everything I link to there, my YouTube and my website and all of that. I always talk about on Twitter, so that's the
Yeah,
best place to find me.
because we started first this conversation about how difficult it is to unlearn bad things or bad concepts, and
Hmm.
how much time we actually put in learning the bad things. Ladies and gentlemen, this is really like advice from the bottom of my heart. If you want to expand your knowledge when it comes to the market, follow those who have completed their CMT. Follow those who have completed their CMTs, because they know what they are talking about. A lot of people, I mean, it's so, free information doesn't per se mean that it is good information. Often it's just, high, low, B quality information that probably won't bring you anywhere. And unlearning things will require a lot of discipline and willpower to override that with the correct information. Michael, are there any other things before we wrap up you want to share with us? Maybe one tip or one trick for the next for this bull market as long as it can hold.
I would for when we're talking technicals for this bull market, is just have an exit plan. I don't know how many
Mm.
traders, I've got my own website, my service where people can check out the strategies that I build and all that. And I talk to a lot of traders there. And the one thing that made me sad is talk to a lot of them is people talking about being, millionaires on paper. And then, it all came back and crumbling down. We don't know what's going to happen next. It could go to, I've seen projections from the cup and handle breakout on Bitcoin of 300,000 plus. I could happen, could absolutely not, right? So I think what's very important is that regardless of whether it's this or meme stocks or penny stocks or biotechs or whatever, again, you have to have a plan and you have to stick to it to say, I am going to get out when this occurs. A moving average, a trailing stop, an anchored VWAP, whatever it is, have that in place, because it's so easy to get euphoric right now where you buy. Again, I talked about, I bought mana at 40 and it almost doubled in 3 days and I don't even know what they do. Right. So it's like there's a,
Yeah.
there's it's easy to feel that, okay, I'm a genius, I figured it out, I'm the greatest crypto guy ever. And you just, again, have to have that plan to make sure that when your brain's super euphoric, you have a way to come down to earth, you have a way to go to cash. Worst case scenario, right? You get out a little bit too early and you have to buy in at a higher price. That's the worst case scenario, but that is way better than the alternative of not developing an exit plan at all, thinking that this is going to last forever, where we have many cycles that show boom and bust and boom and bust. And just like you mentioned, just by having a system to go to cash, you're going to be better than 99% of the traders out there that continue to hold through these cycles, right? Just see the graph that I have up here where it's 4 times the return of Bitcoin for one simple exit rule to say, when we're below the year date anchored VWAP, I'm going to go to cash. When we get back above, I'll get back in. Very simple. Come up with something. Doesn't really matter what it is. Not going to be perfect, but just please, please, please have a system to go to cash, to lock in your money and then go from there.
I can not agree more with that statement, Michael. I truly believe that having a plan without an exit plan is actually no plan. It's,
Right.
it's just walking around with drugged actually by your own emotions and feelings. and those things never lead you anywhere. And you actually simplified this. You just actually need one rule to exit the market. Worst case scenario, you exit too early.
Yep.
And my philosophy is, I know probably I'm gonna exit a little bit too early, and I'm fine with that, or a little bit too late, and I'm
Hmm.
fine with that, as long as I can keep the biggest, the biggest meat, like the biggest profit. If I can lock that up and I give just 30%, 20%, even 40% in this crypto market, if I get 40% back, I know I've done a really good job
Yep.
against the
No,
benchmark.
yeah, just have a again, it won't be perfect. I think is the kind of closing thoughts there. Whatever your plan comes up with, it won't be a perfect plan. You won't sell at the top, you won't buy at the bottom. You may sell and the thing continues to rip, or it may come down from 120,000 to below 100. You get out there and you lost 20%, left 20% on the table. But just be okay with that, and be like, okay, at least I'm not somebody who is uh, holding forever as it goes down 90, and then I have
Mm,
more capital if I like it to buy it back when it is down 90%. Who
yeah.
knows?
I can't agree more with that. I mean, I know there are different predictions. We had Axel, and the breakout target in his system was 137, and of course it can go higher. But if you would
Hmm.
ask Michael Saylor, his bearish thesis would be 4 million for Bitcoin. There's a big discrepancy, but
Yeah.
everyone needs to come up with his own plan, and it could be done with one simple rule: anchored VWAP 21 EMA, a bearish divergence, or something else.
Hmm.
And for that something else, I would definitely urge and motivate people to click on that link we have just shared. Go to Michael Nauss' Twitter profile, follow him, check the resources, be smart, make good use of CMT knowledge. Michael, it was an honor to have you here. And we would be more honored if we can have you also the next time. Thank you so much for being with us.
Anytime you want to chat, this was super fun. Yeah, have a great